In any profession, there's no way you could be super successful or even successful if you don't have the skill, right? So uh, if you have no medical background, you can't go in and perform brain surgery successfully. If you've never picked up a violin, the odds of you going up and playing a solo with the New York Philharmonic is, successfully is zero. I think everybody, any sane person will tell you that these things are totally impossible. It's 0% probability of success in any profession if you have no skill or work in that. But trading, you could know nothing. You could be completely ignorant and just go in, and if, let's say, we have a raging bull bubble going on, and buy anything and you'll make money. So it fools people to believe that trading is easier, that you can succeed, that anybody can succeed. But in truth, it's no different than any other profession. Over the long run, only those with the true skill will succeed.
Welcome to the FundSeeder Rise Podcast, where we uncover what it really takes to go from independent trader to institutional manager. I'm your host, Emanuel Balarie, and each episode we sit down with some of the world's top traders, allocators, and mentors to explore edge, mindset, and what defines a true market wizard. And so my guest today is the author of the Market Wizard series, Jack Schwager. And Jack, this is a unique interview because we know each other so well. And I've probably been with you in many different countries, hearing the Market Wizards talks in front of hundreds and thousands. And so as I was thinking about this podcast, I wanted to really ask some unique questions, perhaps, ask questions that haven't been asked before. And one of the things that I wanted to ask you just to start off is you've interviewed hundreds of traders, but if you would interview yourself and you would define your own relationship with the markets and how it's evolved over time, like how would you describe Jack and the viewpoint of the markets and your personality in the trading style?
Well, certainly it changed. I guess at the very beginning, very early on when I first got into the business, maybe I had sort of dreams or hopes or thoughts of becoming a great trader. I don't think everybody's cut out for two reasons, really. Not everybody's cut out to be a great trader. The two reasons are, one, not everybody has that indescribable thing that makes great traders, which is different for everybody. I mean, all of them. So the great traders are not great traders in the same way. They share traits, certainly, but their methodologies, their personalities, they're different, but they all have something unique, whether it's some sort of intuition, whether it's almost a cold-blooded way of being able to look at markets and not falling prey to the human emotions that take out most traders. But whatever it is, they all have their own unique edge, so to speak. They were born to be traders, just like some people are born to be musicians or sports stars or whatever. We all have our own talents. So that's number one. You have to have, and I'm talking here not just about being a profitable trader, but I'm talking about being a really superior trader, right? And so that's the first element. And the second element is wanting to actually having the passion that that's what you want to do. So sure, I and everybody else almost, the idea of making a lot of money by being great in the markets, that's appealing. But what does it take to get there? And particularly, I'm thinking of a book that I'm just finishing writing now for the first time, co-author George Coyle. But all of these traders we interviewed, just all of them have gone through many years of just complete devotion and commitment to the markets, all consuming, sort of wiping out a lot of other things in their life. So, I mean, one trader talks about getting up at 4 and checking the market at 4 a.m. and then checking the market for the last time at 8 p.m. Now, that's not appealing to me particularly. It may not be appealing to a lot of other people. So, and many of these traders are just glued to the screen all day long. And when the day ends, doing all the analysis, and on weekends, doing research. And, that's to do that, you have to not only want the monetary gain, and people who go in for monetary gain don't, if that's the reason, they're usually going to fail. But you have to have a true passion for the markets, that this is what you want to do. This is what you were born to do. Now, I discovered a long time ago that wasn't me.
Yeah, I'm
That
curious.
wasn't.
Yeah, Jack, I am curious about that because you mentioned briefly about how you wanted to become a trader. And what I want to do is, if I can, I want to go a little bit inside your mind of what made you decide. I mean, before you started interviewing all these market wizards, right? And before you started seeing patterns, when you wanted to become a trader, like what inspired you,
I
and what
didn't.
got, and then ultimately, when did you realize I don't have what it takes, you know?
Unlike the people I've interviewed, I didn't have this passion to become a trader. That desire, or that thought, I should say, not a desire, that thought came only because I fell into the finance markets. I had an economics degree from a Ivy League college, master's, and I was just looking for an analytical job. I was not involved in markets. I had no particular interest in markets per se. I had an interest in analysis, but not markets per se. And I fell into the job as a research analyst in the futures industry. And that's how so once I was there, I said, hey, this is interesting. And then it becomes obvious that if you're really good at it, you can make a lot of money and all of that. So that thought becomes appealing. But I never in my life was a point where I say, hey, I want to really trade. I don't want to do the research. I don't want to do the writing. I really want to trade. I want to become a great trader. And nor did I ever have my point that I had real confidence. I mean, there are points where I felt, okay, this is working. And then if it stops working, I stop trading. So I never had that blinding confidence that the people I interviewed have. So I was never at a point where I made a true commitment to be a trader. So it was always a side thing. My days were always occupied by things other than trading. And I always, throughout my entire life, had periods where I was just too busy with other things than to be a trader. So it wasn't that I wanted to be a trader, that was never a desire per se. It's just once you get into the industry, the idea of, hey, making millions as a trader sounds appealing. But as I said, you have to have the talent, which I didn't feel I had a special talent for it. And, I don't have the emotional balance for it. I'm not patient. Uh, the pain of losing to me is much greater than when I win. It doesn't mean, I won, when I lose, it bothers me. So it's very asymmetrical for me emotionally. So there are a lot of things about trading that personally made it something that this wasn't my life goal. This wasn't something that I was going to do, but it was a hobby. It was like sometimes if I had the time and I had the interest and I had some market ideas, I trade. And sometimes when I didn't have the time and I didn't feel like it, I didn't trade. So it was always just nothing more.
So you were talking about this new book that and I've heard you say this recently, that as you're interviewing this new class and this new breed of traders, that the common theme they have is they're just absolutely fixated, obsessed, however you want to describe it, on the markets. It involves them, and I'm curious in terms of if this is a relatively new phenomenon over the last 20 to 30 years, maybe even possibly because of your book, right? Because your books that were inspiring, and that it, for the first time in a history, it showed that this is possible, right? You can be someone who is not from Wall Street, and then you could become somebody that grows and evolves. And before that, was it different? And you had the stories of the turtle traders. I was talking to somebody about it today, right? Where it actually is opposite of what you're saying. It was an ad that was placed in the newspaper, and the whole idea was we can actually help you and train you to succeed, and teach you the mindset, the risk management, and be successful. And of course, there's been some that have been successful from that group and others that haven't. And then even maybe previously before that, where you had the floor trading environment and you had mentors and you had people that you came into the industry, and they would come alongside you and teach you and train you. So it's a long-winded sort of question that, like, do you really think that is it impossible that someone who does not have that innate trading fixation to actually be trained like in the old days? Or has the world evolved where it's so much more competitive that now you really have to have what it takes?
Well, first of all, even though it's much more competitive, when you have competition of these giant hedge funds with literally quant funds with literally hundreds of brilliant PhDs in math and physics and whatever. That's who your competition is. And forget it, and AI coming on strong and all of that. So it would sound that, hey, it's got to be a lot more difficult now. But that's the kind of odd thing. The traders, let's say, that I found in this current book, or I should say we found, George and I working together. In some cases, they may be the best traders I've ever encountered in some ways, some of them. So I'm seeing records that are as good as anything I ever encountered. But in any of the books, even from the original Market Wizards books. And it was also an unknown Market Wizards. It'll preview the book I did, wrote the first edition now about 5 years ago. They too had some incredible records. So there apparently is still possible for people to do spectacularly well despite the enormously greater competition. That's because I think there's something almost that you can't precisely define that certain people have that makes
So
them
like
great
a
traders.
certain DNA or like,
Yeah,
I
it's
mean,
just
is this something that I mean, this is what I hear you saying, and I've heard you talk about it, where it's almost that it factor. There's that innate ability, much more than, and I guess this is a question that I'm saying, whether it can be cultivated.
you can learn and do the right things and go from a losing trader to a winning trader. But I'm talking about really spectacular success. Again, I think it's like any other endeavor. Not everybody was born to run, if it's a men's time, say a 210 marathon. There's just a very tiny percent of the population that has that particular physical makeup to make it even possible. And then they have to have incredible devotion and hard work to make it work. Musician, like not everybody is going to be, no matter how, I don't care how much you practice an instrument. There's only a tiny percentage of people that will ever be soloists with major philharmonic orchestras. It's a combination of innate talent and incredibly hard work. So, I mean, just because you have the talent doesn't mean it's going to be expressed, but you have to have the talent. And it's true in the markets as a trader as well. I believe that only a small percent of people have that particular thing that makes it even possible for them to be great traders. And then, of course, they have to use that talent to combine it with incredible devotion and hard work. And
Yeah.
those that are meant to be great traders have that passion, and they put it together and they do it.
Would you say that when you're talking about like that talent and you keep on referencing it, is it mindset? Is it that they have an uncanny ability in their mind, self-awareness? I mean, is that the common theme of like,
Mindset has a lot to do with it. I mean, so it's a lot of it is psychology. Basically, our human nature is, and you've heard me say this in talks, our human nature is very, very poorly aligned to be a good trader. We have evolved to do all the things that are anathema for good trading. So as Bill Eckhart said, I think it was in the New Market Wizards, people have evolved to seek comfort, and the market doesn't pay you for being comfortable. So really good traders don't have those emotional flaws. They're able to do things that are uncomfortable but are the right thing. And that's not something, I guess you could learn it to some extent, but it's difficult. You kind of be able to overcome your natural instincts. And I think for really good traders, they don't have that particular issue. They don't have those emotional flaws that most people have. And they may have emotional issues of other sorts, which is a completely different story. But I'm talking about applying what they know to the markets. They are not impeded by, or certainly to the same extent as most people, by the emotional impediments that
yeah,
make it difficult.
yeah, they have a strong. I mean, it's like in any other athlete, right? Like Michael Jordan, where he talks about, you know, missing shots, but still taking another shot and like, and not being afraid and still believing in himself. Or Djokovic, I've referenced on another podcast, where he pays attention and where where if he misses, a serve or something, and then that critical spirit comes in his mind, he realizes that and uses that just as an impulse to say, let me snap out of it and move on. It's the next set instead of dwelling upon the problem and so forth like that. So I guess this idea of mindset is something that's prevailing that you either have it or you don't. But going, some of these guys that you've interviewed, and in terms of their backgrounds, early life experiences, personality traits, have you seen any patterns? And I know you talk about like musicians and so forth
They're
like that.
right. Not in personality traits, because the personalities are always all over the place. Okay, they if it's political, they could be right wing or left wing, and and I've seen both extremes multiple times. It's just how social. Some of them are extremely sociable, and you do say, "Hey, really nice guy," and some are really rough and prickly exteriors.
So they could be introverts or extroverts. I actually had
Yeah,
can they be
introvert.
introverts
Yeah,
and
yeah,
extroverts?
both introverts and extroverts, right?
Yeah.
Yeah, the personalities are as different as they could possibly be in any. If you would take the broad population, you got lots of different. It'd be, I think, great traders don't have any commonality personalities. I can say that pretty certainly because I've just, as you mentioned, interviewed so many traders, these traders, and they are so different in every metric you would want to consider when it comes to personalities. So I don't think there's nothing there. What I have noticed is quite a few of the traders I've interviewed had an interest in the markets at a very early age, often high school, and that's unusual. And so I think that's a tell that if you have a kind of a really crazy super interest in markets in high school, that to me is, hey, you might really be cut out to be a trader because you've got that passion, and that's something you're again. It's innate. It's not something you develop. I think it's something that's just natural. In this book, a number of the traders got interested. One actually as young as 13, believe it or not. So started trading, not got an interest, but actually started trading at the age of 13. So that's one thing about childhood that does appear. Um, yeah, and
Interesting. Interesting. So like the sort of the patterns you've seen is the early life experiences that they've had they've had a passion for the markets or they've traded, and maybe there's a correlation there with like what you said earlier where they're really focused on it. So if you can imagine a 13 or 14-year-old, my son is 14, right? Like he's got other things going on, right? There could be a bunch of other things that he's doing, but if he's has a passion for the markets, that probably says something where his peer group
yeah, I
might not
would
be.
say that changes the odds of whether he would be successful in the markets or not. If he has that passion at that young of an age, I would say the odds are that he would probably be successful.
Yeah. Anything else? Any other like common background or or have you seen successful traders that, let's say from a economic socioeconomic perspective, that maybe grew up in lower income and they had a desire to make money versus those that had top flight education and wasn't impactful?
Yeah,
I'm
I
curious
mean,
about that.
yeah, a number of traders had sort of grew up in poor backgrounds and had difficult childhoods. Whether that is makes them more prone to be successful, I'm not sure. It certainly doesn't hurt. And it may be that difficult childhoods give them sort of a inner fortitude that makes it possible to be successful. If anything, I would say it's probably beneficial, but there have been traders I interviewed who came from comfortable backgrounds, early, good, easy childhoods, and are successful. So I don't know if that itself is a indicator, but certainly there are enough traders I've interviewed that have had the difficulty in terms of early childhood.
So, many users of FundSeeder, Jack, as you know, have a dream, right? They have a dream to become the next market wizard. It's similar to someone who has a dream to uh, become a pro baseball player or be an A-list actor. And and I think you and I have talked about it. It's just a dream, but the reality is, it's much more difficult, and only the elite make it through. Nevertheless, right? There are some good traders that might not be great. A question I have for you is, what would you tell the good trader that says, okay, look, I understand, like I perhaps have not been as focused. I'm self-aware. Like, what do you need to do to unlock something, do something different that maybe transitions you over to that elite status, right?
Well, it depends. Everybody's
Is it
different.
possible? And is it possible? Is it possible? Is it
Yeah. So,
possible as a good trader to then click something later on and go elite?
well, this is for any trader, the way to get better is to be cognizant, to identify and be cognizant of where your weaknesses are. One definite commonality I've noticed among many people I interviewed is they keep diaries or logs of their trading, and sometimes to incredible lengths. I mean, I've had traders pull out binders of notes that they've kept on their trading, and sort of analyzing their trades and what they did right, what they did wrong. Think of a trader from the last book where not only did that, but would also have an Excel sheet where he would monitor different components about his psychology and mood to become aware that if he was in a certain psychological state, that it was not, he shouldn't be trading or he should be trading, whatever. So being very aware of what's working, what's not working, which you have to go through the work of keeping a diary of what you're doing right and particularly what you're doing wrong. That is the way, and reviewing it, that is the way you can improve, because what that can help achieve is not entirely eliminate necessarily, but reduce the things that you do wrong. And if you do that, that's improvement. So that's, my advice would be, if you're looking to improve your trading, there's really no shortcut around it than actually doing the work. And you do a trade, why did you do it? And after a turn, did it work? Did it not work? What did you do wrong? What did you do right? And here, this is important. It's not whether the trade won or lost, which is the mistake everybody makes. It's not whether the trade wins or loses. It depends whether you did the right thing or not. Those are not the same. So if you've got some sort of trade that you do and it wins, you win twice as much as you lose when you win on average. And it has a 50-50 chance of being right. Well, if you keep on doing that, you'll make money doing it as long as those statistics don't change. So if you do it and it's part of those 50%, it's a trade that falls into the 50% that loses, you didn't do anything wrong. If you did exactly what you're supposed to do, those are the statistics. Nothing wins all the time, and you're just playing the probabilities. Like if you're playing blackjack and you're able to count counts and know the probabilities, you could have the probabilities in your favor. And if you make a bet and you lose, it doesn't mean you did the wrong thing, because that would over time is going to work. So you have to distinguish between doing the right thing and the wrong thing and winning and losing. So when you're keeping notes on what you did right and what you did wrong, it's not whether the trade won or lost. It's whether you did what you were supposed to do or deviated from it. And
Yeah.
sometimes we all do things that we know are wrong, for God knows what, but that's what you have to know. So whatever it may be, and it may be different for every person, if you see that black and white and review it, the next time you're tempted to do that, you'll stop and think, wait, this is something I've done before, I need to avoid it. So if you start avoiding those mistakes, and what the mistake is an individualistic thing, then the trading can improve. So that would be my advice on how anybody can improve from where they are.
Yeah. And it's a prevailing theme that is coming up, which is what you're talking about is that self-awareness and then the accountability, journaling it, and then the accountability thereafter to say, okay, I'm gonna change that. Like I see this blind spot, or there's this innate quality in me. I was talking to somebody today, a trader today, and he said, look, I think what I need help with, Emmanuel, is that I feel like I'm too modest. I feel like I'm realizing that it's difficult for me to be successful, make a lot of money because of how he grew up, right? Like it had this influence, in how
Yeah,
he traded.
that reminds me of Ed Secoda's, in the original Mark Lewis's very famous line, everybody gets what they want out of the market. And in particular, he mentions one trader he knows that every time he got to a certain level, he would do something stupid and blow up. And then he'd make the money back and blow up. And he just had this threshold level, and it was because his father was a failure, and he just has a mental block of going past that. And so that's not uncommon. That's not
Yeah.
uncommon.
Yeah. One more question on this topic, and it's maybe on the flip side of the coin, but what's like the biggest myth that traders believe about what it takes for them to become successful? And maybe they're believing this myth, they're spending a lot of their time on it, and it doesn't help. It could be detracting. Like, have you come across the non-successful market wizards of a belief that they have that is actually an impediment?
Well, I mean, to broaden the question to what is a myth or this misconception that a lot of people have about markets, uh, is that it's an easy place. It's an easy way to make a lot of money. That is the big misconception. Yes, you could make a lot of money and easily sometimes if like the old cliche, which is true. Don't confuse brilliance with bull markets. So a lot of people will think that let's say if they're buying stuff that's in the news and popular, it's going up and they're making money in those periods. Will think, hey, I'm brilliant, I'm making all this money. But
Yeah.
it's just like the rising tide lifts all boats, and they're only participating for a long side. So that conception that you can make a lot on, it's easy to make a lot of money. The truth is, over the long run, if that's all you've got, then you could end up losing it back, which happens to a lot of people. So the truth is, to really be successful, it takes a lot of hard work. It's not easy. And here's the thing: there's a difference between the profession of trading and every other profession in the world. I don't care what it is. And that difference is, in any profession, there's no way you could be super successful or even successful if you don't have the skill, right? So if you have no medical background, you can't go in and perform brain surgery successfully. The odds are zero. If you've never picked up a violin, the odds of you going up and playing a solo of the New York Philharmonic successfully is zero. Everything else, it's clear to anybody. I think everybody, any sane person will tell you that these things are totally impossible. Not one out of a million. It's 0% probability of success in any profession if you have no skill or work in that. But trading, you could know nothing. You could be completely ignorant and just go in, and if let's say we have a raging bubble going on, and buy anything and you'll make money. So it fools people to believe that trading is easier, that you can succeed, that anybody can succeed. But in truth, it's no different than any other profession. Over the long run, only those with a true skill will succeed. The difference of trading is there's only two choices: you can buy or sell. And by luck, for some short period of time, or for some period of time, you could be lucky and just be on the right side, because there's only two sides of the coin, short and long.
Yeah. Yeah. That's good, Jack. That's good. So transitioning a bit in, talking about scaling and, the purpose of a FundSeeder, the purpose of our accelerator in this idea of how can you transition from being an independent trader to managing external capital. And you and I, we've traveled the globe together and have some stories specifically in Portugal, right? Of when we made some allocations and that the trader couldn't handle it, emotionally, they just couldn't take outside money. It's, again, obviously ties into mindset, that impacts them. But what's your view on some core shifts that have to happen for a trader to successfully scale and manage other people's money?
Okay, so a couple of things. First of all, for a lot of traders that are very successful, and the ones included in the Market Wizard books, including the one in the current one I'm working on, including the last one, and just all of them, is that some strategies don't lend themselves to managing a lot of capital. So, like, there are two traders in this current book. One has not had a losing month in, well, over 10 years documented, and then he was at a prop firm. Don't have this, but I don't have no reason to disbelieve, not believe it. But probably for 15 years has not had a losing month. But he's not making millions a year. He's making, 300,000 a year, whatever, just steadily. But every month he makes money, literally a month. But his particular approach wouldn't scale. Another trader trading, God knows how many years, maybe 25, 30, but and rarely has a losing month, and the losing months are tiny. And I asked them, why don't you just look? I mean, You know all the metrics we developed for FundSeeder, right? So the gain to pain ratio, the adjusted Sortinos. I mean, we're talking about, well, the guy who doesn't lose money, you can't even calculate him because it becomes infinity. And this other trade I'm thinking about was very, very few small losing months. I mean, we're talking like crazy. So I don't remember offhand what it is, but a gain to pain ratio of like over 20. It's like adjusted Sortino ratios in that area. And these are numbers where we're really excellent, might even be just two. Might be really good. And so they're just like completely astronomical, way off on the right hand of the tail. But the methodology, it just doesn't lend itself to trading more than a certain amount of money. So to begin with, a lot of traders have these great records, and one's in an unknown market risks. There are a number of traders that had multi-100% returns for a decade or longer. But their approach is just they're going big for their account on very precise moments, like a central bank announcement or whatever. In that particular example, where there's only so much that they can trade, so they're making great returns, but it's not compounding because the methodology doesn't allow it. So that's one thing. The other thing is the mental part is even if for a methodology which does allow break capacity, as you mentioned, some traders just psychologically can't go beyond a certain level without it impeding. And some
Yeah,
traders
and
have
those are, and
difficulty.
those are Jack, those are the ones because of course if somebody's has limited capacity or maybe they're shorting, small cap stocks, it's in it that's a filter already in terms of transitioning to managing institutional capital. But I'm curious more in terms of
Yes,
the capacity's there.
yeah. So the capacity is there. For those traders, it becomes either a matter they psychologically can deal with trading the exercise, or they can't deal with managing other people's money. So, an interesting example: Peter Brandt, who was an unknown market, last book on market wizards, sort of had a really good long-term record, and always has friends ask him to manage money, and then he agrees to manage money. Then he's got a 17-month period where he has his worst performance. Just the worst performance he's had. It's not horrible. I mean, I think he had a mid-teen drawdown, but this is a guy who's extremely low risk. He got maybe risks a fraction of a percent on any given trade. So for him, like losing 15, 16% drawdown is a big deal. And what he did is what he never did before in his life or after was he started experimenting with different things. He's a classical chartist, tries to pinpoint points where he goes into the market with very restrictive risk management. He started experimenting with indicated, which he never did, and he was just doing things that he never did because of the frustration of being in this drawdown. Finally, decides he can't manage it. He doesn't want to manage people's money. Returns the money to the few investors he has. The month he returns his money, he turns profitable and wins. Probably has like another 16, 17 consecutive winning months. And it's exact. He starts losing when he starts managing other people's money. He starts winning when he gives that up. So some people just can't deal with a feeling of guilt, maybe, that they're losing other people's money. And I can relate to that. I would find it very difficult. Even if I was a trader, even if I had gone into trading as a profession, I don't think I ever would have been comfortable managing other people's money.
So, but we still haven't if you've seen some what a trader can do to be successful. Those are, I think we've talked about stories of the inability to transition from independent to managing external capital. But consider this, right? And maybe you could think about these profiles, Commodities Corp, right? And there were a couple, Bruce Kubner, Paul Tudor Jones, I think, and they've been able to transition to manage other people's money and build scalable businesses. So have you seen, or pondered upon, this is what had to happen for a trader to be able to manage other people's money,
No,
not be amped?
that I think is again a matter of personality. So somebody like Kovner or Paul Tudor Jones, they successfully transitioned to managing other people's money, in terms of billions and billions of dollars. They had whatever in that personality where that was fine, a problem. But for some people, managing other people's money is a problem. So it's a matter of personal psychology.
Is there any way to have that as a checklist? Like, I'm curious, right? Like, because we're interviewing traders and we've interviewed traders before, and you look at their historical track record and you think they have edge and they're articulating it, but that additional filter of, do we think this person has what it takes to manage it? I mean, do people do that? I mean, is that
Don't think you can answer that until it's actually done. So there's no way to predict somebody who's only traded their own money if they've done successfully. There's no way to predict if they can then transition to managing other people's money successfully without seeing what happens when they manage other people's money or managing much greater sums of money. So so that's really the issue. And you have that uh, sort of I think you prevail in the last Market Wizards book, really steady, high statistics, consistent. When we tried to allocate money to him, he just couldn't. I mean, he did the right thing, but so he just didn't trade the excess. So 95% of the money just sat there, not being traded. He was, whatever we gave him and whatever we allocated, he ended up trading equivalently. Could have been trading 1/10 as much the same way. He just psychologically couldn't deal with it. But
yeah.
you don't know until the first time you try it.
Yeah, I'm wondering, and maybe that's again the value of a coach or the self-awareness that we discussed, where as a transition point, the first maybe checklist, if I would put together a checklist now, would be for the trader to say, look, this is going to be difficult, whether I think so now or not. Like, I'm probably going to feel uncertain, or I might think that somebody's looking over my shoulder in terms of the trades, and it might impact my trading, like whether it's taking risks, whether to stay in a trade much longer. And maybe that first level of just coming to, that a conclusion that, like, this is not the same and it's going to be difficult. And what do I need to do to overcome this difficulty? I mean, that's probably a good starting point, right? Like that many people probably don't even think about.
I think in cases of people who have traded only their own account, you just have to start small on the allocation and gradually increase it with their comfort level. And if they're doing well, allow them to ask, okay, I'm ready to take more capital. That's that type of thing. I think it has to be it has to be gradual. You can't take somebody who's been trading $100,000 very, very account, they throwing money out and doing it very consistently, and then give him 50 million to trade, whatever, or 10 million even, or even maybe even a million. So you have to just go smaller, and as it's working, just you can increase it month by month even, but it has to be gradual. You don't want to make a huge transition because it it might not it decreases the odds of it working.
Yeah. I also know, I mean, it's kind of an aspect of this is probably the pressure that comes upon them of, managing other people's money. But I'm wondering in the lead top traders and market wizards that you've interviewed, how they think differently about uncertainty, or just, compared to your average traders, and how they're able to handle uncertainty, of course, in the markets, in terms of drawdowns they experience, and that mindset that kind of gives them that edge.
Uh, well, the most obvious answer is through risk management is the way you deal with uncertainty. For most of the traders, most of the time, they'll have a well defined idea, or sometimes they may be too big to put stops in the market, but they'll have a well defined idea of where they're going to get out of a trade that doesn't work. So that is the simplest, most straightforward answer. Occasionally they blow it, not all of them, but some of them, not all the time, obviously, but just occasionally. But I have a couple of traders in this most recent book where they've done extraordinarily well. Within that ride, a couple of times they blew it in terms of they just stayed with the trade way longer than they should have, and really had much larger losses than they should have. So they have drawdowns that are large. But those are the exception. The answer to how you deal with the uncertainty is simply risk management.
Right. That's from the markets. But when they're in that drawdown, and maybe this is more again going back to the psychology and the mentality of some of these traders, and now they're navigating self-doubt, right? This is the lowest draw, this is a draw that I've had, or I'm what have there been, some commonalities of what they do during even that drawdown moment? I remember, Jack, again, the same Portuguese trader where, when he would have a drawdown, he would say like there was something wrong with it, like he might get in an argument with his wife or whatever the situation is, and you just told him, you give him a simple advice of just put a little notepad on your computer and say, if I didn't sleep well last night or something, I'm not trading, you know. But at that self doubt point, what are these top traders doing at that time? What are they doing to build up their self confidence again?
Well, within drawdowns, there are if it's a matter of feeling they're out of sync with the market, then the answer, the typical answer is one of two things. One, drastically cut your trading size until you're back in sync with the market. And obviously, I'm talking for discretionary traders because systematic traders, by definition, just are supposed to follow the system. Or the alternative is to just take a break, and that's a pretty common answer. So if everything you're doing just seems to be wrong, it's just out of tune with the markets. Well, that's going to happen, and you can't reverse it by trying harder. So the best thing to do is just close out all your positions and take a break for a few days or whatever amount of time. And when you feel inclined to come back, come back. So that's a common solution to breaking a drawdown if you're a discretionary trader that is just out of sync with the markets.
Yeah. All right, Jack, transitioning a little bit, I'm curious now on your interview. You've interviewed some of the best traders out there, some that have not, often, they communicated things to you that then became public that they otherwise never communicated. And you definitely have a unique ability to get traders to open up. What's your internal strategy going into an interview with these traders? Like, what are you thinking through? I'm sure you
There's,
have a process from that perspective.
there's two things I do that I've done from the first Market Wizards book on, which I think are helpful in getting sort of honest and incisive interviews. Is number one, I tell them that, hey, I'm going to let you see what I write, the final draft, before I send it to the publisher. And you'll have the ability to point out something's wrong or you said something that you don't want said, released for whatever reason. We can agree on, and we can cut it or change it in a way that we are both comfortable with, and we'll come to some sort of final revision that it's fine. We'll send it out, but they know that they won't be blindsided. That I'll do the interview, and then a book comes out, and there's things that twist what they said or got it wrong or whatever they might be concerned about. So I give them that assurance. You'll see what's going to be in print before it gets sent to the publisher. So that's one thing, and I think that provides a comfort level that's critical to getting an honest and open discussion. And the second thing I do is about how one conducts an interview is I don't go in with a set of questions. I basically have a conversation. And here's the thing, the key thing to do is you have to actually listen to what the people are saying, because some of the best material comes from a response that is points out something that is of interest, that you can go off on a tangent that if you had a list of questions, you wouldn't have been on your list because you didn't know about that. And then somebody says that, oh, well, if that's the case, then can you tell me more about that? So you have to be paying attention and having a conversation and listening to the responses. And that can take you off on the tangents, which are really good material. So those are the two key things that I think I've done as an interviewer that have helped me get better interviews, so to speak.
Interesting, interesting. And then when you do dig deeper because you're listening and like how do you know or maybe okay, they just mentioned something that perhaps they didn't think was relevant, but you sense there's something there. Like, is it just like your own intuition, like as an author now that has done that for a while, or do you how do you discern that?
It's just whatever, there's no planning involved. It's just natural. I just go whatever strikes my curiosity. The only difficult thing in doing it this way is that you have to keep multiple points in your head at the same time. So
Yeah.
you had a question that you were ready to ask from what was previously said, and you had, let's say, multiple questions that you wanted to follow up with. And then they say something that's particularly interesting that you want to go off on a tangent. So the difficulty is you go off on a tangent, you have to remember to come back to the points
Yeah.
you still had in mind. So that's the juggling of keeping multiple thoughts in your mind at the same time is the most difficult part of that. But I think it's necessary to do it that way.
Yeah, that makes sense. You know, you've the last couple books we've crowdsourced in many way market wizards, right? Through unknown market wizards and now this new one. And you've had a lot of different, applicants. We filter some of those through FundSeeder. When you have that early conversation, Jack, like is it do you pretty quickly discern, okay, this person could potentially be a wizard or one of my chapters, and if so, like what is that? Like,
Well,
what gives you that at least?
the first thing is the track record, and you have to verify it. So I could think in this book we're working on right now, and this may have been through FundSeeder, I don't know, where the contact came, but sounded very compelling on paper. And I said, fine. I said, okay, send me your monthly statements and whatever, and never heard back again, that type of thing. So a part of it is just making sure that the track record is, that's the immediate filtering process. And to find extraordinary track records there are not that many, they're unusual. So you're not deluged with people with unbelievable track records. It's usually a much smaller number. So the thing is, if you find a great track record, then that's pretty much good enough by itself. Now, the story may or may not be interesting, and I've had interviews where I ended up not using it because it was dull. I couldn't put any life into it. I don't think it added anything. So even if the person had a good track record, it just didn't work as an interview. So that happens. That's your risk. But usually early on, you could tell whether you have initial. Also, you want to know how they made the money. So if and I've had this type of situation where they've got, let's say, great return risk, but then the way they do it is they're kind of scalping 3 ticks per trade on a lot of trades or whatever it might be. And there's just no story behind any of the trades, and there's no lessons. Now, so the record may be really good, but it's really just very mechanical and very dull, and nothing that's repeatable by somebody else. There's no lessons to be learned. There's no human interest story. So those type of things, if that's what the approach is, I can rule that out because it just doesn't. It's not going to lead anywhere. Yeah, so I would say that's the second step. The first step is make sure the track record is there, and the second step is to make sure that what they're doing has some interest and potential value in relating in an interview.
Yeah, that makes sense. So the filter is first the track record, and then you're going to find a story behind it, and
Yeah.
like how did they get there, and what's the story? I'm curious. The Market Wizard books have featured. Do you know the percentage of them that have been in the U.S. versus other countries? Top heavy, I would imagine.
I'm sorry. So what's the question?
The percentage of Market Wizard interviews that have been U.S. based versus.
Yeah. So mostly U.S. based, but I get last book, quite a few were not. I guess it was probably half and half, U.S. and non-U.S. There were quite a few non-U.S. in the last book, and in the current book, there's nine into. I think only 2 are non-U.S. based. No, 3. 3 are non-U.S. based.
In Europe, right? Or are there any in Asia, in
Yeah,
India, South America?
Europe. Well, yeah, in this book, Europe, Asia, and the other one I can't say because it's the one time I've done an anonymous interview, so I won't say the location.
Yeah. Okay. Yeah. The reason I'm asking is, there's clearly a new generation of traders and market wizards that are coming, and they're global. I mean, for FundSeeder, as you know, Jack, we've had traders from over 120 countries. I think the traders that are part of this cohort, there's 9 of them from 5 different countries. And, for those traders that are in non-established hubs, if you will, what advice would you give them in terms of breaking into the industry, aspiring not just to be in your book, but to manage outside capital? Is it
Yeah, well,
something that's possible? Is it a
yeah,
hard
well,
road?
obviously, as you well know, the answer to this that as FundSeeder does provide that avenue. So if you really have superior performance that is provable, and FundSeeder is one avenue where you could potentially get allocation because there's no prerequisite for any particular pedigree or any particular country. I'm reminded of the line when Michael Marcus, the great trader I had in the original Market Wizards, he interviewed for Commodities Corp, which at the time Commodities Corp was uh, was founded by Helmut Weimar, who was a PhD quant, and there were a lot of quant-oriented people. Paul Samuelson was on the advisory board and stuff like that. And sort of when Marcus was being interviewed, he said, what does he do? Well, he just trades. Well, he was being hired to be a trader, but he just trades. I mean, he didn't have the quant background or anything like that. He just trades. The same thing here. He doesn't have the degree, but he just makes money trading. Well, that's all that's important. If you can prove that you've got an approach that's consistently making money, a place like FundSeeder could give you the avenue to get the allocation.
I think allocators in general are still hesitant to allocate to an emerging trader that has the return characteristics that they're looking for. They clearly have the mindset, but yet they're not. It's still the big multi-strat allocations, and they haven't. I mean, obviously, we've done this a while with FundSeeder, and why is it so difficult for them to take that leap of making that allocation?
Well, for one thing, the allocations that they would have to give would be too small to be of any consequence. I think that's now FundSeeder is willing to, with the fund just having started within the past year and starting from a small, it's not a multi-billion dollar fund or whatever. So is more, is willing to do these. We can do $1 or $2 million allocations, and it's meaningful. It's not inconsequential, particularly since it can grow. But if you're taking a $5 billion hedge fund and they're going to allocate $1 million, all they're comfortable allocating is $1 million to an emerging trader who they would consider taking a flyer. It's just not worth the bother because it just won't move the needle. So that's part of it, and part of it is uh, Wall Street tends to go just where to be comfortable. Well, if you hire a trader and he was a math PhD from Princeton, you're not going to get flack. But if you hire a trader from who has only finished high school in wherever, that's Malaysia or whatever. I don't care where. You're going to get flack because why'd you hire this guy? It's like he has nothing going.
Yeah. Yeah, that makes sense. The risk reward from their side, and
But
again,
again,
hopefully we can be.
the fund seeder has a different checklist. It's basically really comes down to verifiable track record and explaining what you do. And that's it. It doesn't make a difference if you have a degree. It doesn't make a difference what country you're in. Nothing else matters. So, it's different than typical Wall Street.
Yeah. A few more questions, Jack. You've interviewed all these legendary traders, market wizards about trading. Have any of them impacted you personally, not in terms of trading or how you view the markets, but about life? And what has that, if so, can you share with us one of those impacts?
Yeah. Well, first, in terms of trading, I guess the biggest impact on trading would be Bruce Kovner's, whose line was "Know where you get out before you get in." And whenever I put on a trade, the order of his buy or sell is accompanied by his stop. They go in together. So that's straight from Bruce Kovner, and that's great advice. It's good risk management. It takes away a lot of the emotional element and so forth. So that's as far as an influence on trade. If I say the single biggest influence on trading, that would be it. There are lots of others. We've gone to a lot of areas, so we don't have time to go into all the tangents. But if I had to pick one, that would be it. As far as the other side, I find increase, and this is way, but I've been there already. But I find, let's say, particularly in the new book, a lot of these traders that taken small amounts of money and made a fortune are get to a point and they say, okay, there's more to life than this, and are trying to rearrange their lives so they spend a lot less time trading because they don't want to just spend their whole life glued to the screen. And understanding that there's more to life than trading and not being willing to make those sacrifices is something that personally I kind of think I was there all along. But I'm finding that there are traders I'm interviewing now who have to have incredible success and come to a point and say, yeah, I don't think this is the way I'm going to live the rest of my life.
And so that's impacted you personally from the
Well, it just
perspective of let me go cross country skiing and
what a weird. that sort of reinforces it.
Yeah.
Right? So,
Well, Jack, thank you so much for being on this podcast. We've been interviewing several different advisors, and I asked them a question at the end of what's their favorite book. And I think right now we're like 5 for 5 market wizards. If there's one book they could recommend,
yeah.
so it's had a tremendous impact. So I'm going to flip that on you.
Yeah.
Of
So
what is that one book that you would recommend that every single
I
trader
guess
should
I
read?
could name a single favorite book. Uh, I would say Endurance by Alfred Lansing, which is the story of Shackleton. And just a great book. I've read it multiple times. It's a great story, but also underlying it all is that not giving up, this internal strength, just never give up, can sort of achieve what is totally impossible. So I like the book because that message is a good message, but I like it because it's also an incredible narrative. So as a single book, that I would say my favorite. I'd mention one other book, which is I find that usually entertaining, is A Walk in the Woods by Bill Bryson, which kind of provides a great story with great humor and about an out of shape guy getting an even more out of shape college buddy to hike the Appalachian Trail with him. So just like I say, very entertaining, funny book, just a fun read. So those are two.
Thanks, Jack. Thanks, Jack. Thanks for being on. Really, really appreciate it.
Sure. Okay. Enjoyed it.
Thank you for joining us on the FundSeeder Rise podcast, where we spotlight exceptional independent traders from around the world and explore the future of active money management. To learn more about FundSeeder, our mission, and how we support emerging managers globally, please visit us at fundseeder.com. The information shared in this episode is provided for educational and informational purposes only and should not be considered investment advice or an offer or solicitation to invest in any fund or trading program. Trading futures and other derivatives involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Until next time, stay curious, stay disciplined, and keep rising.